Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Thanks for being with us. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist at bullseyeoption.com. Good morning, everybody. Wonderful to see you. So, Alan Nuckman, we'll start with you. Your first trade there is Apple. We just had Kenny Polcari on. He was talking about the big cap names that he's loved. I don't know if he mentioned Apple, but that would be the kind that people count on. What are you thinking here? It's trading around 154 today, and we got some price target raises recently, too, on this one.
Yeah. Now, Apple is obviously bellwether stock, and I'm very positive about the price action that we're seeing here in the S&P, the Dow, and the Nasdaq, and it's in all of those. Obviously, we all know they're a major moneymaker, the largest, profitable company in the world, I think. So technically, I like what I've seen here in the fact that in the big picture today, we're going to be talking about consolidation. Now, this is a wide range. This is a stock that's traded roughly between 140 and 180 for the last year. So 160 is a midpoint magnet. If we get above the 160, then it'll probably get a push to the top of that range. Now, what I'm looking at here is there was also bullish divergence in January, meaning it made new lows, but not new highs and implied volatility. That was a signal that the shorts were running out of strength. And you were also seeing leveraged buyers accumulating this stock. So I'm looking at the June call. June has 3 months of time. The June 140 call, again, I'm not scared of being long from 140. That option's expensive. It's $20. But it's also $15 in the money. So it's 3 months of time, plenty of time for the macro market to make a breakout here. I loved the action last week, but we'll just keep pivoting around this 4,000 level. If we get to that 180, the top of the range, this option doubles in value.
I see. All right. What are you thinking here, Ben?
Well, I'd have to agree with Alan in terms of the trade has been very much contained, right? But range bound, and we are at a pivotal level here. Let's begin first and foremost the hourly time frame, some of the bid activity we've seen. I'm going back to the beginning of January when we were trading around 124 and rallied all the way up to, well, this 158 area that Alan's talking about. It's the upper extreme of the range that we saw February and then recently in March. But let's just first and foremost identify well-defined trend higher and then sideways consolidation. As you look at that bottom left corner around 124, you'll see a bit of a double bottom down there and then a bit of a run up here. Again, as mentioned, along the way, areas of consolidation that have formed. And then look at this run up that we recently saw off the March lows, the high conviction trade to the upside in this small area that's forming above this 150 level, the midpoint of the range since February. It's very reminiscent of this bigger picture move up. Again, right? High conviction to the upside, sideways consolidation. So this is acceptance right now of the move we've seen since the beginning of the year. Now, here you can see how we're just forming a bit of a range, and it's got a pretty well-defined upper and a lower extreme, 157, 158, as Alan was talking about, the lower extreme 143. But taking a look at the daily time frame, you're going to see that move up that we just looked at since the beginning of January, here it is, just a small blip on the radar in terms of that longer-term trend that's been playing out. So you're giving benefited out to the bulls in terms of the longer-term trend, looking for extension to the upside. And look where it's kind of testing right now, the middle of the range that we've been in. And, well, you can see as I drew a few areas of consolidation here, middle of the range coincides with that 155 area. So up and through 158 is going to be supportive of the move to potentially retest 182. But again, in this instance, well-defined trend to the upside, the test that we just looked at, remember that move off the January lows, the run-up since March? Look, that coincides with a key area that was established at 120. So this all very bullish here still. Lastly, I just want to show you, Nicole, where things stand. We're back above the 200-day moving average, back above the 50-day moving average. This is a stock that's up 18% year-to-date. RSI kind of limited in terms of participation. We want to see this kick in terms of some upside momentum here, but this one's got a bullish pattern playing out on the intraday time frame and supportive of the move that we're seeing on the daily as well.
And I'm sure a lot of people, as you note, that 120, that lower level that we saw in December, the low actually 124.17. I think, Alan, people must have been very nervous and jittery at that point. It's gone from 124 to 154. And to Ben's point, with this bullish move. So your final thoughts here on Apple and the big picture. I mean, is this something you would own 5 years, 10 years?
Oh, yeah. Apple is a stock that I love to trade and love to participate in. But if you look at it, you can see that, at that 125 level, yes, people should have been scared. And the way that you see that is with the implied volatility. But guess what? The implied volatility didn't show that they were scared and didn't show an increase, even though stocks making new lows. You would think it would be making new highs of volatility. Nowhere close. That's a sign that it may be kind of a stall at that point. And at some point, it's going to trigger people that had those shorts to take profits. And that's exactly what's happened. So today, this stock, this play, is as much about the strategy, buying an in-the-money option, a stock substitution, being long from 140, which is $15 in the money, that to buy the shares of stock, 100 shares of stock, is going to cost you $15,500, whereas, $15,400. Whereas if you're buying this option, it's going to cost you $2,000. It's still an expensive option, but you have the right to be long from 140, and that's a very, very solid level, in my opinion.
Okay, let's get to your next name, Micron, which has been a winner year to date. Like many companies in tech, has also announced they are cutting the workforce down. Some people interpret that as a good thing or a bad thing, depending on how you look at the numbers. But your thoughts on Micron, which today is around $57.
Right. Well, I'm listening, and I don't hear Ben, because we had this stock back in November, December, and it did gain 100%. So it's given us a second chance opportunity here. It's got a double bottom at 50. It's been between 50 and 60 for 9 months. So it's a tighter consolidation of this stock. A breakout of this range targets 70. So I'm looking at the $50 call. A June $50 call has 3 months of time. It's trading for about $9.50 or so. It's $7 in the money. And if we get to 70, this option gains 100% for the second time.
All right. Ben, now we're going to hear Ben. I'm listening. Ben Lichtenstein.
Well, this is a stock that did very well in the beginning of January, right? We ran it up. We went sideways, so we did try and accept an area of consolidation that was forming up around the 62 level. But since we started to leak lower, now this is almost identical in terms of what we saw as far as Apple, but a little bit more price decay, and we're starting to take out key areas that were established in that month of January and on the move up. So we're losing some of the momentum that we had seen to the upside. I'm not sure if we're going to see follow through, and here you can see exactly what I mean. 50, 54, 57, 61, just calling out these areas of consolidation on the way up. But look what happens here now as we start to roll back over, taking out 57, right back down to this 54 level. So again, invalidating the working assumption that we're trending higher since the beginning of January. Let's take a look at the daily time frame here, because in this instance, I wanted to point out a couple key things that played out here. First and foremost, we were just talking about the run-up in terms of the more intraday time frame, how it's losing momentum. That's kind of rolling over here at a key area where we saw a bit of a triple top play out now. This comes after forming a double top here. So again, on the way down, you can see some key areas of resistance, this being the most recent up around 65 and where we're stalling out here. But let me just show you what we established here in terms of these these triple tops, and on the way down, how well you can see migration of value to the downside. This is a stock that's been in a longer term trend lower. So that's what we're talking about in terms of bigger picture ideas here. Yeah, nice run up in January up into the 65 level, but now hitting resistance, and also again, just a small blip on the radar in terms of that bigger trend to the downside. So let's take a quick look in terms of what's going on as far as the 50 to 200, still struggling to get above the 50 to 200 day moving average. And you can see kind of in the middle of that range now. Any weakness here opens up a door for a retest of lower extreme 48. But yeah, just kind of failed, it seems like, at that key area around 65. So a nice run up, but struggling to add to those gains that we've seen this year.
Yeah, understood. And when you talked about the 100% there, Alan, what did you mean exactly? I mean, at what point were you seeing, I saw the low of 48 in December. What were you looking at?
Play the tape. We did this stock in November on this show, and we had the right option gained 100%. So a modest move in the underlying stock was still a pretty healthy move. You know, it moved up, but the option gained 100%. That's what this is about. This is in this stock to be long from 50. I've got no problems with that level. That's a solid level, considering this stock was at 100 not long ago. So the risk reward is there. The macro picture is there. There's a lot of positives here. You've got plenty of time, and just a modest move to 70. This option would gain 100% for a second time. Now, I'm not going to put words in his mouth, but I'm going to say here, Ben, you know that a bull flag, is a continuation pattern.
Oh boy, I got to get to snap. Ben, give me 10 seconds, Ben.
Well, what I look at is a little bit more of a longer-term picture, I think, than Alan does. So again, what I'm seeing is more a trend environment to the downside, bigger picture, a failed retest of that key area. So yeah, I mean, if we build momentum to the upside here, that could reverse the trend. But at this point, I think it's still intact.
Okay, let's get to Snap, Snapchat, Snap Inc., Snap year to date up 20. Is it? Oh, that's not right. Is that right? Yeah, year to date up 23%. Alan Nuckman, tell us about that.
Well, again, it's the same setup we talked about here. Notice with a very expensive stock, then there was a medium-sized stock. Now, this is a cheaper stock as far as the price goes. So you can do more things with the option strategy. I'm going out to September because it's a cheaper option, so I can buy myself more time, 6 months of time. But the same thing we see here, bullish divergence was happened on those October lows. It made new lows, but not new highs in implied volatility. So it's been coiling between 750 and 15, a very tight coil here for 9 months. A breakout target is 22.50, and most importantly, there's a gap up at $20. So I'm looking at the $7 call. Again, the low is 733 or something. A $7 call is $4 in the money. It's trading for about $5 right now. 6 months of time. And if this stock does fill that gap, this option's getting in 150%.
And if we're also seeing this volatility each time we get headlines from legislation or regulation against TikTok, that's good for Snap. Ben, I know you've watched this volatility on this name. Take us through the technicals.
Yeah, there has been a significant amount of volatility as of recent. Not so much the case, though, throughout that rally that we saw end of December, January. It really came into play, you can see, in the end of January. And then, well, since it hasn't really diminished yet, but we're still in a wide range. Alan talked about 15 down to the $7, a $9 level. He might have said $7.50. I thought it was $9. But again, you can see migration of value to the upside. You can see well-defined high conviction, and then it just kind of lost that momentum, right? We've been kind of consolidating around 11, taking a step back. You'll see pretty well-defined upper, pretty well-defined lower extreme, but as long as we hold above 850, 840, there's some momentum to the upside here, that's for sure. Let's step away from this intraday look, the hourly, and just show you that it's just a snapshot, a small little blip on the radar in terms of what we've seen as far as the bigger picture, because Snap has been crackling and popping along the way down here from 83 to, well, as it's hanging out around 11, but I went ahead and identified some areas of consolidation. In this instance, you can see a very well-defined trend, 7 areas, in fact, of consolidation in this wide range that we're forming right now since July of last year, basically hovering around, again, this $11 level. Let's just show you where things stand in terms of the 50 to 200-day moving average, because you can see that, well, some of that recent volatility has us back above those closely watched levels, but RSI is kind of limited in participation here. It was not showing a lot of enthusiasm to the upside relative to what we saw in price. So again, just in my kind of bigger picture view here, I see this longer term trend that continues to play out. Recent failed the test of the upper extreme. If we continue to build momentum, we retest the lower extreme here around the $7.
Yeah, I mean, and that's some chart. I mean, when you look at that long-term chart, Ben, you really tell the picture of Snap. Alan, final thoughts, maybe big picture ahead of the Fed?
Well, the Fed, and I listened to your last guest, you know, the destination hasn't changed. How we get there, do we do 25 here, 50 there? You know, that's going to be the bump in the road. And the destination has always been the same, and that's what the markets are telling us. We top out at 5 3/4 in short-term rates. You know, we know that. It's just, when is that going to happen? Maybe that's been shifted forward from May to, you know, June or whatever. But we know the destination, and then rates decline as we go out into the future, 24 and 25. That's what the market's telling us. So we're almost finished with this nonsense, and the Fed has done an amazing, amazing job getting the results we wanted. So I want to mention that. But I also want to mention the strategy that we talked about today. We had Weight Watchers back here in, January? The January 12th, we mentioned it. And that's a stock that did the same thing we talked about. It coiled, it had bullish divergence, it had leverage buying, and it had a breakout. So those options on Tuesday gained 100%. So that's the strategy. That's how I like to position for success with these limited risk in the money options on stocks that had been, beaten down. Gives you much, much better risk reward and great payoff with these options.
Right. Alan Nuckman, great to see you. Thank you so much. And of course, our own Ben Lichtenstein with the charts. Alan Nuckman, Chief Market Strategist, bullseyeoption.com, and Ben Lichtenstein. Thanks for the big three, gentlemen. Okay, coming up, we're going to spotlight the market's performance in 2020.